Welcome back, guys, to the channel. And what I would like to do in this episode is basically just start going through some basics to the new people. I know there's going to be a lot of people that are going to be watching this that have most likely done a course already, but I just want to go over a few basics. I can't go very much in depth into everything, but I will do and see what I can go over as much as possible. So there will be a few little episodes in this video just going over and touching over a few points. But first things first, all right, guys, and little pointers, some information that that might help going forward. So the first thing to note about forex trading is that when I first got into it, you think that it's for the clever people, it's for people that need to know maths, they need to know, all these degrees, but that is definitely not the case, all right? Generally, people that are very analytical, that are numbers people, they don't actually do well in forex, okay? They tend to be too analytical, looking at things, and things need to be a certain way all the time, but this is not the case, all right? Anybody can learn forex, anyone can learn technical analysis, and that is the beauty about it. All right, so first things first, don't worry about it. If you are young, old, got no experience, haven't gone to school, dropped out of school, whatever, you can definitely get into forex. The second thing is that when we get into trading, we need to understand that it is all about risking money, okay? Trading is about risk, understanding that when you are wanting to trade, the money that you're wanting to risk is money that you're willing to lose, okay? And once you accept that and start with that in the beginning, you will see that your trading will change from the start, okay? Generally, people that are worried about the money that they're risking, or they've started with 500 Rand and that's their 500 Rand that they've saved up, then you will be trading a bit different, all right? So understand, going into trading, trade with money you literally don't care about, okay? If you want to think about it as, you just want to throw that money away, or you're not worried about it, then trade with that money. And that's what I've found, is especially with new people, they will trade on a demo account, and they will be, trading anything. They will jumping into anything, no emotions attached, and they will say to me, well, they're doing well, they're making profits. You will, because one, your emotions aren't attached. You're not attached to any money. So it does play a big role. You won't be using a stop loss. You'll be holding it into the negative, wait till it goes into the positive. So your whole emotions change, all right? So trade with money you're willing to lose. Whatever it is, obviously different people in different situations. Some people will put in 5,000 Rand and they will risk it all. That's okay. It's okay. But as long as you understand you need to trade with money you're willing to throw away. And the things that we use to trade, okay, what I use to trade is obviously three things. You need, one is a broker account, and a broker account will be where you put your money into the account and then you transfer it from that trade broker account into your trading platform, okay? Now, brokers, there's so many, and rather look for a broker that is in your area and is regulated, okay, properly regulated. So once you have a broker, we then use a application like you see on my screen here. This is TradingView, tradingview.com, and I will go over a few bits and pieces shortly of how we use it and what we need to look at on this chart. So TradingView is where we do our technical analysis. We understand what the chart is doing in the day, in the week, in the month, and we can then make our analysis based upon that. From that, we take that information, we understand where we would like to enter or exit the market, and we will then be placing trades on a MetaTrader 4, and a MetaTrader 4 will be on your cell phone, okay? And this MetaTrader 4 is free from the App Store, and this MetaTrader app will give you areas and price where you need to be putting in of where you're entering, where you're exiting the market, and also what you're going to be risking, okay, based on obviously what we said in the beginning with your risk. Now, I wish when I started in the Forex market that if somebody told me this one sentence, which I've only been understanding it a bit differently for the past few months, is that the market and the financial market is so big. Okay, it is actually about a $6.2 trillion a day liquid market. Okay, now that market is obviously growing, and the reason why it's so big is because a lot of people are losing money, and money is flowing through, okay, the system. So this system, all right, and this is what you need to understand from the beginning, is that the Forex market and the way it is in order to trade it is designed, all right, to take your money, not make you money. All right, it is there to take your money, not make you money. And that's the reason why a lot of people obviously fail or just quit, is either they just don't get it, or the market will be doing certain things, and what they've learned, they apply it, but that strategy can maybe only win a few times, whereby the market can now start seeing or understanding that everybody is seeing this one thing, and they will then basically do the opposite, or they will make you see what you're seeing, and then just throw you off. So there's different ways that they do this, but just know that it is here to fool you and to take your money and not make you money. But obviously with our analysis, and as we progress and as we learn and add new things, work on our mindset, work on our psychology, then start implementing these different things, especially with risk management. How much I'm willing to lose, how much I'm willing to win, and how many times do I win and lose, all right, on different trades. So that's what we basically need to put together in order to keep ourselves consistent and keep ourselves moving forward and profitable in trading. So those are just a few things from the beginning you need to understand, all right, and how we need to get into this. On the next little video I'll be doing is just looking at TradingView and what we need to look at from there, and then going forward with our other analysis. So I'll catch you on the next video. Let's get straight into this second snippet, and just looking at TradingView, guys. So if you go to tradingview.com, so if I go back to my profile, all right, you can see once you have registered a profile, you'll be back onto TradingView. This will be your profile over here. All right, so what you want to do is you want to click on chart, and this will take you to your chart. All right, now generally you will see that it will take you onto a different chart to what I had there, and for now, let's just look at your different buttons and what we basically use. There's so much stuff on TradingView that we generally don't use all of it. All right, so if we look at the top left over here, we can see it says AUD USD. So basically what this is meaning, we are looking at the Aussie dollar versus the US dollar. All right, now whichever pair is in the front, so Aussie dollar is in the front, that is your main currency that we're looking at. So if the price, okay, and we'll see the price over here on the right hand side, you can see 74050, 74100. So you can see the price is moving up. So if the price is moving up, that is basically saying to us that the Aussie dollar is getting stronger than the US dollar. And if the Aussie dollar is going up, then the opposite, the US dollar, will be going down. Okay, And that's basically how to look at it with your pair that you're looking. We're always trading a pair. It'll never be just the Aussie dollar. It'll be the Aussie dollar, US dollar, or the Aussie dollar, the Canadian dollar, right? That's the type of pairs you're going to be looking at. Then to the right of this, you will see these different numbers, okay? 5M, 15M, 30M, and basically these are the time frames that we use to trade, all right? So starting from the right, we can see here, M is for month, 1 week, day, 4 hour, 2 hour, and so forth. 1 hour, 30 minute, 15 minute, 5 minute, 1 minute. All right. So the higher the time frame, we tend to use that a few times in the week just to see what is happening on a higher scale. Right. We generally are looking at mainly the daily, 4 hour, and then your lower time frames for your entry. The lower the time frame, the quicker the market is moving. Okay. The higher the time frame, the slower the market is moving and takes longer to play out. So those are your time frames. Very, very important what we're looking at. Then down the side here, we have your different toolbars, okay, that we're using. So this is my toolbar over here that once I've put together. So what we generally use, we use a horizontal line, a sphere or ellipse, just to maybe circle things or highlight stuff. Horizontal ray, arrow. We have a fib retracement, a Fibonacci, which we'll get into a later lesson, a rectangle tool. We have a short position, all right, and I will go over what we mean by short and long. And then we have a text, okay, long position, and price range, and definitely a trend line. Okay, those are the main ones that we use, and how we get to them is on the left hand side of your screen here. You can see if you click on this one here, it pops out. If you highlight these, it will then build yourself a toolbar like you have over here. All right, so those are the main ones that we're using. We have your daily time frame, you have your pair. Now the next thing to do is this little watch list here. If you click it open, you'll see there's a whole lot of pairs now in this watch list. You can now have as many as you want in there. You can only put 1 or 2. They're ones that you want to watch. If you want to add a pair, all right, you'll then go to add, and then you will then type in here AUD CAD, something like that, and then you will choose the first one, generally the one that has, and it says FXCM next to it. So once you click it, it will then pop back into your watch list, and then you need to click on it like I've done, and you can see the chart appear in front of you. All right, so what now that we are looking at is, let's just go to this chart currently now, and what I want to share with you is because a lot of people will see the chart and get confused, and they will wonder what's going on. What am I looking at when I'm looking at the chart? All right, so let me just go back to another time frame. All right, so now I've clicked on the daily, okay, and you can see now that we are currently sitting on the daily time frame. So what does that mean? Well, these funny things that you see on your chart, especially for the new people, are called candlesticks. All right, and candlesticks can tell us what has happened in the day, in the hour, in the minutes, in the 15 minutes of that time. So the way the candlestick moves up and down can tell us what is going to be happening. So if you're on the daily time frame now, that will mean that every candlestick you see will represent a day. Okay, so this is over a long period of time. So we can see that the green ones here, generally the colors that you'll have on your chart by default, green candlesticks will be going up, red candlesticks will be going down. Okay, so you can see, for instance, this one here had a big push to the upside. That showed you that that day price pushed up a lot. Okay, it hardly came down a bit, it just pushed up that whole day. And if you look at this one here, you can see price pushed down the whole day. So it was, the price dropped a lot in that day, and whereas the other one pushed up. So candlesticks, again, we'll get to a later stage. Just wanted to mention to you that every time frame you will be able to see that what is happening with price. Is price going up? Is price going down? What is most likely to happen? Okay, and we use that on different time frames. So on a day, all right, you will have this will be the day. So if I show you here and I highlight this day candle over there. Okay, now I go to the 4-hour time frame. You can see we have highlighted, right? We now have these candlesticks that make up that day. All right, so there's 6 4-hour candles in that daily candle, and likewise when I go down to the 1 hour, you'll see more candlesticks. 15 minutes, even more candlesticks, and that is just how to understand how it's moved in the day, how it moves in that minute, and we can trade accordingly. The lower the time frame, the quicker the trade. The higher the time frame, the longer the trade. All right. So it all depends on when you learn your style, the techniques, what time frames you want to trade, when you can look at the market, and going forth from that. So that's TradingView, and that's how we basically understand what we want to look at. If you click on your price here, up and down, you can see how it moves the candlestick, squashes it to open it, and how you want to look at the chart. You always want to look with like an eagle, a bird's eye view. You want to get as much as possible on the chart, nice and clean and easy. If you can see the times as well, you have the timing at the bottom here, where it says there, where the crosshair at the bottom, it says 4:09:20. So obviously that will be the date, and then the time. And as you scroll forth, you can see the different months, days, years going forward. All right, this is obviously what has happened. So everything to the left is what's happened, and where you have this blank space to the right is what is to come. All right, that is obviously now the future. So if you click on your time and your days and you go back and forth, you can see how it squashes it out. So same thing when you look in the chart, you want to make it look nice and clean, neat, not all squashed up, not all stretched out. You want to see as much as possible when you're looking to trade. So from this area, we now can understand that our analysis, where do we see price going? Where is it now? Where do we see it going? And now we can look for places to enter the trade, to exit the trade, and then take that information and then use it with our MetaTrader 4, which is obviously on our phones. So that will be it for this little session, and we can then get into looking at how we look at the market from the top down, together with our first segment, which will be support and resistance. Guys, part 3 of this video, and what we want to look at in this segment is top-down analysis, and then a quick look over together with that is the trend. And that's very, very important when looking at your chart, looking at your candlesticks. Where is price currently? Where does it come from? And that's what we need to do in terms of your higher time frame. So let's just look at this chart. We're currently on Euro USD. Okay, so if the chart is going up, price is going up, meaning that the euro is getting stronger over the dollar. Okay, so let's go to the higher time frame. Let's look at the monthly. Okay, and what I like to do, so we now like to see and zoom out to see how far, and where we are currently sitting with our charts. All right, so if you're looking at this now, you can see back here, this area here was back in 2015, and now it's 2020. Okay, so a long period of time, over 5 years. So what we like to do is, because where price is sitting now, this is the month now, so this one candlestick is the month. All right, and you can see it's pushed up, and it's looking like the price is going up for this whole month. Okay, the price has been going up. Now what we want to do is basically find out where's the highest it could go for now, all right, on this area, and where we've currently been. So for now, what I would like to do with these type of areas, I wouldn't want to go anywhere lower than this area here. I want to stick to where we're currently sitting. Remember, this is 1, 2, 3, 4, 5 months. Okay, just this little area here. So what we want to do, I like to start with a horizontal line, and we want to look at the highest area where price has been, okay, for now on this monthly chart. So if we click it on the top of this wick over there, okay, you can see that this is basically where this 3 months ago price came up, touched it, and then now went back down. All right, so we haven't broken above this currently. Okay, now what I would do, I'd get another one, and then we want to look at our area of support. All right, and if you look at this zone here, we can see we've had 1 and 2 months basically push off this as support. All right, so before we get into that, what we need to understand is that support and resistance, okay, support would be the floor, all right, so let's say this would be the floor, and resistance is going to be the ceiling, okay, so this is the floor, this is the ceiling, and what generally you'll find is that when the price comes up to the ceiling and it can't break it, and then it falls back down and it comes back up, okay, and then it might do this and then back down, and then off here, and down, all right. So what you can see is that price is coming up to the area, can't go through, gets rejected, drops down, gets rejected, drop down. So this is an area of resistance, okay. Same here, resistance, price comes back down to this area and it bounces off and it creates an area of support, okay. Likewise for this zone here. But now if you look at in between how this price moved here, there will be another area, okay, of support and resistance. See, another area of support, another area of resistance. And something to note is that generally when a strong resistance breaks, okay, it becomes support, and when a strong support breaks, it becomes resistance. All right. So that being said, you can see this is the area of resistance, this is the area of support. So now we've got these two lines on the monthly time frame. Let's go down to the weekly. All right. So as you can see, this pair hasn't really moved much, okay, in between these two monthly time frames. On the weekly now, what I like to do is try to find a center ground, okay, between these two monthlies. We want to find the center ground, and if I just look at this area here, what we like to do is look at our psychological numbers. So what I mean by that, and what helps quite a lot, psychological numbers is we want to round off, okay, to 000, 250, 500, and then 750, okay. Those would be roughly the psychological numbers that I want to round off to. So let's put these here like that. So if we look at this now, and if I put a line in the middle, or roughly in between these two, we can see that it's close to 17965, right? So I would like to put that to around 8, okay, 000. Now you can see how price there is rejected it, then we're above it, all right, then we push below, we sit there, and okay, we've been basically messing around below these two prices. But you can see now, as this week, we have now pushed off this line and potentially can go up as high as this area now. Okay, so now we've done the weekly time frame. Okay, very, very easy, simple. We've rounded off these levels. Okay, let's go now down to the daily time frame, because these zones, or the monthly, weekly, we're not really trading. Okay, generally also not really trading the daily. We're just wanting to see what is happening on these time frames, where price is bouncing off. Okay, so what I want to do is now I've got 3 lines here. This one we can maybe adjust as well to 60. Okay, like that. And what I want to do is we've got 3. So I want to now split these 2 into 2 and these 2 into 2. All right. For now, because price is sitting between these 2, let's now put 1 in there. You can obviously make these lines different colors if it helps you. All right. So let's have a look here, and this looks like a 999 or 9000, sorry. Okay, let's make that a different color. Let's make it red. Now you can see how price is currently broken above. Okay, broken above. So now what we do is we've taken areas of where the highest it's been, okay, where the lowest it's been, and we've taken areas of where price has been been maybe hovering. It's either has it broken above the weekly, has it broken above the monthly. All it's doing is looking at where these zones are, where prices, has it rejected that zone, has it broken through the weekly, all that type of stuff that we're trying to look into context. Okay, we're giving ourselves a space on the chart where we think price can move towards, or where it was down to the bottom. That's all we're basically doing. We're trying to clear all the clutter away, okay, of what and where price could be moving. So from here, now what I want to do is, I'm on the daily chart. I'm going to stay on the daily chart for now, and I want to understand, is the trend going up? Okay, so for instance, when the trend goes up, it moves like this. Never just really moves in a straight line. And when the trend goes down, you can see trend moves like this. Okay, that trend's going up. That means the price is increasing, and this means that price is decreasing. All right. So let's go back to the chart now, and we can see that in this instance, we can see that price has come off this area, come off it again, and it is currently moving upwards. Okay, price is moving upwards. And the easy way to spot this, if you just look from previous price, okay, previous price, and you just had to put a line from the bottom of this point and to touch this other point like that, okay, you can see that price, even though it came down here, it's still going up. Okay, it hasn't come through this line, or it hasn't broken this area over here. Price is still going up. So what that means is that we generally only want to look for bars. Okay, we only want to look for bars. Now, it doesn't mean that because we've broken above there, this could just go straight to that area. Okay, we could have this rejection. Price could come and push back down below this red line, like this has over here, and it could reject it and then drop back down to this area. All right, we just have to monitor and see what happens with the price. From here now, we can understand that price is going up. I only want to look for bars. We have broken above this area. We now want to go to a lower time frame and understand what is going to happen. So just by looking at the 4-hour time frame now, even though we've had this big push to the downside, okay, we are still sitting above this zone, which is our weekly area. If we now close below that, we could then potentially see a drop to this target. So just by using these different areas, understanding we're bullish, we could possibly now get an area to buy where we currently are, and could see a further push up on this pair. Okay, but now we also have our 4-hour time frame, and we can see that there's zones over here where there is a resistance as well. If I had to highlight this zone here, you can see where price pushed off, came down, pushed off, came down, right? So this area here is showing us a bit of resistance. So what could happen, and what could be a small trade, we could now see this on the 4-hour, say that we've come back down to this area. We broke this area of resistance. It is now support, and possibly we could push back up to this resistance. So that in turn could line up with our buying pattern, and we could now say that I want to enter the trade over here, and I want to buy it back up to this area over there. Now, whenever price is going up, okay, we say we want to long it, okay, or the price is bullish. And if the price is going to drop and we want to sell, we will then short it, right? And that's where these positions come here, the short or your long position. You would click it on the chart, and let's say you're wanting to enter over there. This here now would understand how much you're willing to risk and how much you're willing to reward, okay? But within this case, we can see we're sitting above. We would put our stop loss just below like that, and that would be our small risk to reward, okay? Would be a risk to reward of 1 to 3. So if you're risking 1%, you're going to be making at least 3% on this account if price had to go up to this trade. So that's just a simple and quick, easy way of understanding top-down analysis. Is the trend going up on the daily time frame? Are we above our weekly? Are we above our monthly? Where could price be going and heading in the direction? Very, very simple, but we can follow on from this and we will then see you on the next lesson going forward. Any comments, please drop me a comment, or message me on Instagram or Facebook, and get in touch with any questions regarding trading, or what you would like me to work on in the future, or any points you want me to touch on. Keep well, and I'll speak to you guys on the next one.